rising home loan rates and rising input prices, is buying a property getting too expensive in India? Not really, if one goes by the recent house pricing tracker released by CREDAI in partnership with Liases Foras and Colliers. Now, according to the latest findings, housing prices in India's top 8 cities have seen an average increase of 5% over the last 1 year. Which are these top cities which are most in demand, and where can you buy the cheapest homes? Let's get the insights from Mr. Vardhan Patodia, President of CREDAI National. We also have with us Ramesh Nair, CEO India and MD Market Development Asia Colliers, and Pankaj Kapoor, founder and MD of Liases Foras. Mr. Patodia, I'm going to come to you because I need one immediate answer. Of course, with home loan rates going up, HDFC has just bumped it up to over 8%. And, we were sub 6%, sub 7% just a few quarters back. Overall mood, how has it been, sir, on the rate hike?
See, short term, definitely we feel that rate hike is going to impact the sentiment of the home buyer. But on the other hand, what we are seeing is that the take-home pay of the home buyer across the country is also rising. And with the tremendous rise in input cost and the hike in interest rate and the state of inflation in India and across the world, I think the central bank did something which was inevitable in these circumstances of turbulent times and geopolitical tensions. There could be a small concern, but I don't think it's such a large concern that the sales will be impacted in a very, very negative way. I think people are going to accept it, and we will see that there's a robust demand of housing all over the country, and we expect that during the next quarter, which is the festive season, sales will be buoyant.
Okay. Fair point. Let's see how the festive season pans out this year. We will do a discussion after that. Ramesh Nair, I'm looking at the report and saying, all right, so, NCR prices have gone up the most, but it was also the most depressed market for the last 3-4 years. That's gone up by 10%. Some other markets have gone up just by 1%. As little as 1% is what I see in Kolkata and Chennai. On an average, across top 8 cities is 5%. Now, this is not even as much as what we've been facing as inflation. So to me, it seems like it's good news for home buyers, but developers are still struggling to raise prices.
So, Manisha, you spoke about the 5% year-on-year increase, which we have seen in Q2 this year, calendar year this year. What we're seeing is the prices have surpassed the pre-pandemic levels. That's a very important point we should note. And that basically signifies robust housing demand and supply which is well aligned with demand. So I think that's the first thing we should share about is pricing have finally kind of come from the from all the downward trends we saw in COVID. It's kind of crossed that. Second is average price increase of 5%. Definitely not bad. Manisha, we shouldn't forget the lull in the overall industry from 2014 to maybe 2020 or maybe even till mid of 2021. So after a long time, we are seeing good capital appreciation across the country. And you look at a market like Hyderabad, which from the first quarter of 2019 to today, prices have gone up like nearly 30%, which is definitely a good sign. NCR has gone up around 16%. I think these are some of definitely things we should look at. And all the cities, Manisha, we saw a dip in unsold inventory. Again, which is a very good sign, except Hyderabad and Ahmedabad, where it was a little bit unsold inventory went up. But overall, very good signs in the residential market.
Okay. So I know that all of you are celebrating the fact that demand has crossed 8 cities, in the 8 cities has crossed the pre-pandemic levels. Pankaj, can you give me a future projection and say, where are we going to end 2022 at? And is that number going to fall short of or at least equal what we sold in the peak time or peak years of 2013-14? Because, I'm going to start celebrating only when we reach that number. To me, that means real recovery for the sector.
My own sense is probably we are already at the peak. I think if you see the mortgage industry data and our data itself, I think we are peaking. We never really sold this many number of units. In my own sense, we are going to really surpass the last peaks. And the reason being is that we have willing developers who are absorbing the increase in the prices and the burden, and they're not passing on to the consumers. Another thing which you need to see, the last 2-3 quarters, we are seeing unprecedented flow of the new supply, and new supply is bringing fresh incentives to the consumer, and this flow of the new supply is clearly suggesting that the volumes will continue to be growing, and we'll be probably touching the new peaks the real estate market has so far witnessed.
Mr. Patodia, fair enough. Numbers are looking good. The value of sales is, of course, also now peaking at its all-time high, and we may make a new peak. Unsold inventory, let's come to that. The fact that developers are launching new supply, but we still have a pretty high number of unsold inventory across the top 8 cities, Mumbai being the largest. But your sense, will that not keep prices also depressed, or let's say very, very stable? When somebody is buying a home, they do want to see appreciation in the price of home that they're buying into. So too much supply is not that great for the market unless absorption matches.
Manisha, I think too little supply also not good for the market.
I would agree.
Probably we need to have a balance between supply and demand, and see, all the supply which is kind of coming in is not ready to move in. If you look at a ready to move in inventory, which is very, very low, I think it's the lowest in the last 6-7 years which we have seen. So anything which is under construction will definitely have a timeline of completion. But overall, we see that the Indian economy is still one of the fastest growing economies in the world. And we are talking about a 5 trillion economy in the next few years. I think unless we have supply, there will be tremendous shortage of housing in the country, which we don't want as an industry. Supply and demand has to be balanced. And I think what most of the inventory which we are talking about is under construction. So, and any under construction project takes some time to complete. It's a cycle of at least 3 to 4 years before the inventory comes in into the market as a ready to move in inventory. I think my take is in the next 5 years, we'll always have a shortage of ready to move in inventory in India in all the segments, including ultra premium, HIG, LIG. That's my take in the future.
Okay. Fair point that 90% of the inventory is for under construction projects, and they have a sort of a time period in which the inventory gets sold, and closer to them being ready, of course, the sales are the fastest. I'm still very concerned, Ramesh, about Mumbai inventory, unsold inventory. It's at a very high percentage of 36%. And I'm continuing to look at all the average prices, and of course, we will continue to flash them on the screen for our viewers to know what are the average rates per square feet in different cities. Mumbai is still holding on to 19,700 rupees, and it's a very wide market, very disparate market. But just give me a sense of Mumbai market. Is it likely to get cheaper now that there is so much inventory, or do you think that prices will probably, just hover around where they are?
So, Manisha, like we discussed, unsold inventory saw a dip in most of the markets amidst this robust sales. Bangalore saw the steepest decline, 21% drop in inventory. Pune saw a 15% drop in inventory, both great signs. Like Harshi said, 90% of this unsold inventory is under construction. So only 10% of this is actually completed. So there's no cause for alarm. What we see in those Chinese cities of so many completed apartments lying vacant or whatever, that's just 10% here. MMR still accounts for the highest share in unsold inventory. Of the 36, it's nearly 36% of the overall unsold inventory. One more thing about MMR, what we should remember, Manisha, is if you remember the last year, the government had given a lot of incentives with regards to reducing premiums. If you had applied for your permission approvals before a particular date, you got 50% waiver of the premium cost. So there are a lot of projects which went into drawing board stage, a lot of projects which went into construction. That's something we need to kind of remember. Second is MMR always has been a very, very robust market, and today it's a much bigger market. It's when we look at the MMR market, the suburb extension, which is Kalyan, Dombivli, Badlapur, there's a lot of land there and a lot of supply which is being created. So difficult and wrong to kind of paint the entire MMR market with one brush. One thing which kind of is of concern today is obviously the home loan rates. Same time last year, for a lakh of loan, for every 1 lakh rupee loan, you were paying around 760 rupees as EMI. Today, that 760 rupees has become around 812 rupees. So that's something which the industry needs to be worried about. If everyone is talking about more interest rate hikes, so that will definitely could have an impact on the housing demand.
Okay. Pankaj, would you agree that you don't see any pressure on Mumbai region with so much supply coming up? New launches also have been phenomenally higher because of the premium discount that the developers got, plus the fact that it's sitting on so much of unsold inventory, even if it's under construction. I would love to hear that Mumbai market will get a little bit cheaper, however wide it is, even a Badlapur or you're going to Navi Mumbai. It's not an inexpensive market at any end.
If you look at it, it is very wide, and you divide the Mumbai MMR region into two regions, which is Greater Mumbai and the rest of the MMR region. You would find the rest of the MMR is having a price equivalent to what you would find Bangalore, Hyderabad and Pune. And when it comes to Greater Mumbai, because land scarcities and high populations, scarcity of the land and the prices, and it has always been higher. And when it comes to the pricing, we have seen muted growth in the property prices. If you see, the MMR has shown just 1% growth in the property prices, and because of the new launches during this quarter, we saw 32,000, which is historically the highest ever flow of the new launches. Even the previous quarter, we saw a good amount of new launches, which is there. So I would say that the pricing pressure will continue to be holding, but I don't see a decline and dip in the property prices from here. Because we see a parities of 2003-2004. If you see that last 4-5 years, there's no increase in the property prices, and then the interest rate during the period has gone down. And my own sense is, as long as the interest rates remains below 9%, the market is able to absorb. Even in past, we have seen when it goes, it starts going over 9.5%. That kind of impact which will happen. Okay. Because of the under construction property, I see the under construction property will continue to be at the discounted rate. And because of that, you would find the city level average prices may probably show kind of a stagnancy. Ready properties are having a growth in the property prices. At all India level, we have seen during this quarter out of 15,000 projects, close to 14% projects have declined the property prices. 66% projects have shown 0 to 5% increase, and only 20% projects have shown more than 5% growth in the property prices. And that shows that how the spread is.
I'm going to come back and get that data from you, because I want to see which are the ones which have actually managed to increase the prices. Project level data sounds so much more interesting than city level. But anyway, I have one more important question to cover, and that's Hyderabad. Ramesh, Hyderabad has completely surprised me. When did Hyderabad become more expensive than Bangalore and Pune? So is this suddenly happened? Yes, 30% prices have gone up, but this is a city where there is no FSI limit. So why is Hyderabad so expensive? Why is it just, pushed up 30%?
So, Manisha, we saw a year-on-year price rise of around 8% in Hyderabad. I would attribute this to the amount of jobs being created. Hyderabad is an extremely robust office market, thanks to a lot of good quality Bangalore developers moving in and starting to build office projects there, and also because of the proactive nature of the government there of attracting companies in Hyderabad. We saw in 2019, we saw Hyderabad office market actually very close to overtaking Bangalore, which has been the biggest office market in the country for the last 10-15 years. So I would attribute this to a lot of job creation, a lot of good quality construction happening. leading to robust price increases.
All right, Mr. Patodia, Ramesh Nair and Pankaj, thank you very much for joining me today on The Property Show. When we come back, we tell you what is that one tax exemption benefit that startup and tech founders are using to buy luxury property, residential in fact, and whether you can use it too.